Hello and welcome to Future Finance 101, your tomorrow's wealth explained today. Credit and debit are two financial terms that refer to different aspects of transactions involving money. They are commonly associated with bank accounts and payment methods. Here are the key differences between credit and debit. Nature of the transaction. 1. Credit. When you use credit, you are essentially borrowing money. 1. You make a purchase with the promise to repay the amount later, usually within a billing cycle. 1. Credit is commonly associated with credit cards, lines of credit, and loans. Debit. When you use debit, you are directly accessing and using your own funds. 2. The money is withdrawn from your account immediately at the time of the transaction. 2. Debit is associated with debit cards and electronic fund transfers. Source of funds. 1. Credit. The funds used in a credit transaction belong to the lender, e.g. the credit card issuer or the loan provider. 1. You're essentially using someone else's money and you'll need to repay it. 2. Debit. The funds used in a debit transaction come directly from your own bank account. 2. You are spending money that you already have. Overdraft and limits. 1. Credit. With credit, you may have a pre-approved limit, and you can spend up to that limit. 1. Exceeding the limit may result in fees or declined transactions. 2. Debit. Your ability to make debit transactions is limited to the available balance in your account. 2. If there are insufficient funds, the transaction may be declined or result in overdraft fees. Interest and fees. 1. Credit. Interest is typically charged on the outstanding balance if you do not pay the full amount by the due date. 1. Some credit transactions also involve annual fees, late fees, and other charges. 2. Debit. Generally, there is no interest charged on debit transactions as you are using your own money. 2. However, overdraft fees may apply if you spend more than the available balance in your account. Building credit history. 1. Credit. Responsible use of credit can contribute to building a positive credit history. 1. This can be important for future loan approvals and may impact interest rates on loans. 2. Debit. Debit transactions do not have an impact on your credit history since you are not borrowing money or incurring debt. In summary, credit involves borrowing money with an obligation to repay, often with interest, while debit involves using your own funds directly from your bank account. The choice between credit and debit depends on individual financial goals, preferences, and the specific circumstances of the transaction.